I'm Coach Tarek, host of Purpose Driven Movement podcast and international educator, here to inform health and fitness professionals like you with the tools to create real change within the fitness industry. I had on this episode Ross Campbell from Beyond Activ. Ross is a tremendous networker, good all-round human being. In this episode, we focused on 4 pillars of industry trends in the fitness wellness space. We really focused a lot on boutique gyms, group fitness trends, technology, and big box chains. So really, this is one great episode to listen in on, really get some insights as to what has been trending, what's enduring, and really what's to come this year and beyond. Check out the Functional Training Institute's latest offer, which is 15% off of any of our online training courses. Simply go to functionaltraininginstitute.com and input PDM15 at cart checkout. Good to have you on the show today, Ross. How are you doing?
Yeah, thanks, Tarek. All very well. Good to be here, and thanks for the invitation.
My pleasure. You've been a stalwart in the industry, not just fitness, but the health, wellness, and beyond now in terms of what you're doing. So we're very intrigued today to understand more about who you are, your story, specifically how it relates to the creation of the Beyond Activ brand, which I've had the good pleasure of being involved as the Functional Training Institute. And I think what you're doing there is just stellar. So the audience would love to know more about that, your story. And then we're going to look into some specific trends that you've seen over the years that that have been consistent in the health, fitness, wellness space, and in particular, what's been trending and the outlook for 2025. So before we do that, first things first, we'd love to know more about the great man, Ross, a little bit about your background and the inspiration behind what is now called Beyond Activ.
Yeah, thanks, Tarek. Okay, well, look, I think some people have heard this story, so apologies if I have to rehash it. I'll try and bit it out as fast as we possibly can go. I basically had 2 halves to my career, Tarek. First half was actually doing large-scale oil and gas investment events. We created a large platform globally, and we held events in various oil and gas and financial cities across the world. We basically connected oil and gas with finance, with business and investment, and it became a global sensation. It was called Oil and Gas Council, and that company is now called Energy Council, and it's still headquartered out of the UK and still doing very well as a company. I built it into Asia, and then I sold my interests back to the majority investor. And with that money, I started on my second chapter of my career, which is maybe more focusing on health, fitness, and wellness, which is always a passion as a young child. And that chapter has 2 parts. The first part was buying a gym and creating a mixed martial art and HIIT gym down in Singapore in the Boat Quay. That was called The Jungle. It still exists today. And for 2 years, it was a passion project. We built up to be a great member community, some great services. But as I was going through that, I kind of realized that the B2C world is just simply not for myself, Tarek. I like the B2B conversations. I like talking to people like yourself, other executives and owners, managers, investors about what they're doing in the marketplace and how they can be so successful. So that's when the second part of my last chapter started, and that was the beginning of Fit Summit. And Fit Summit started before the pandemic. FIT Summit was fitness, investment, technology, and we held events around Asia. We had a great time running them before we got slammed by the pandemic, as I'm sure many of your listeners got slammed today. That then gave birth to digital events, and we were one of the first pioneers into that digital content. And again, we followed down that rabbit hole quite significantly. And then we came out of the pandemic. I started to launch the bigger brand called Beyond Activ, and that really covered the wider gambit of health, fitness, wellness, hospitality, and sports. And we now run 4 events across the world. We've got a number of large-scale retained clients. We do end-of-year reports, email activations, connections, and a whole raft of other BD and sales activities. So that, my friend, in a nutshell, is my career.
Oh, that's excellently summed up. Yeah, it's very powerful. In fact, if I'm not mistaken, the first event was held back in 2019 in Singapore.
Yeah, correct. That was part of Fit Summit. That was our first foray, as it were, into the investment market. We had all the major club chains from Southeast Asia attend, along with distributors and suppliers. And it was really more so focused on fitness and wellness back in 2019, 2020. But it was a great start to the business. We then kind of grew quite quickly to host events in Thailand, Bangkok, Hong Kong, and then obviously Bali and Indonesia. And so we got around Asia quite quickly. And there's real demand for building that community inside the health, fitness and wellness marketplace in Asia. There was never really any association here cross-border. There was never any trade group, never any network of sorts for fitness business owners. And so a good trend at the right time, and we've kept it going, and we're very grateful for industry support.
Yeah, it's interesting. I was there at the very first event, 2019. I was brandishing my book, at the time, and we didn't get the good pleasure of meeting then. However, we connected soon after. And what really blows my mind, even to this day, is that you started the event back in June, as it were, in 2019, and literally within 7-8 months, the world turned upside down. I mean, just that alone is staggering. Like, what was the success for you and your team to go digitally and then revive it into something bigger and even better back in 2022, right? When you reopened face-to-face events, if I'm not mistaken.
Yeah, look, I still remember being in Japan. I had the pleasure of going on a snowboarding holiday with my family at the time. We were sitting and we heard the first outbreak of COVID in Singapore, and we thought, it will pass. I'm sure, everyone listening to this podcast will feel the same way. Within the space of 4 weeks, we were having to rain check and postpone our events for later that year. We had to try and somehow come up with a plan to still be active, still be relevant to our community. And again, we went from a relatively buoyant, cash positive, revenue generating company overnight almost to being a zero revenue company for about 6 months. And so from an entrepreneur standpoint, from a founder standpoint, that was very, very difficult. We had to dig deep into my savings to make sure we could try and keep the company going. We pivoted again into that digital platform, and I think for 12 months, that was really the kind of focus of most of the industry, was delivering digital virtual events. They were successful, and I think, people were very receptive to contributing content, to coming online either live or on demand and watching that content. But of course, as COVID started to fizzle out and as kind of live events started to pick back up, the demand shifted very quickly into live events again. And so we had to pivot back into live events. And as we did so, we'd amassed a lot of loyal clients that were very happy. We'd supported them through the pandemic, and that gave us the wider industry support to keep going into 2022, 2023.
That's truly inspiring. And one thing that I never shirk from is attending some high-level networking events. And yours in particular, I've attended many in different countries over the years, is special because it's focused. I really love how it's focused on fitness, health, wellness. And it's just the magic that happens when you get to have these conversations with focused individuals. So for those of you who don't know much about what is now Beyond Activ, we'll put a link and a bit of descriptions for you guys to sort of know more about it, because, if you're an entrepreneur or business owner, you really need to be out there and understanding what are the trends, which we'll be diving into in a moment, but also just meeting some really fascinating people. And out of that, potentially born some opportunities to collaborate and work together. And to me, that's a recipe for success.
Yeah, there's so many companies doing so many good things in the marketplace, Tarek. And I think if you don't know them, you honestly don't know them. It sounds that simple, but you really have to get out there. I wouldn't even say about the competitive landscape. There are people that are spending millions, tens of millions of dollars on apps, platforms, technologies, solutions, infrastructure, facilities. That investment will inevitably somehow impact your business going forward. So for me personally, again, I've done this for over, 15 years now when it comes to this kind of investment level, business level conference / forum. You really need to be in that room to understand those trends, because it's not a case that you might miss a trick. It's that you might make a wrong step, and they're both equally important. So you might miss the boat, but taking the wrong step could cost your business a lot of money. And so we like to try and provide a platform where executives can be better informed with what's happening in the marketplace, whether that is for capturing an opportunity or knowing when to leave one behind.
Yeah, well said. Yeah, I'm looking forward to the Saudi Arabia event coming up next month for sure. A question I have is, what was the inspiration and the reason behind switching from Fit Summit to Beyond Activ?
Yeah, I thought through the pandemic, everyone became very conscious of their health from a consumer perspective. We also found that there was various sectors in the marketplace that had become a little bit more, shall I say, adventurous with what their expansion plans were. So gyms, for example, wanted to become more health and wellness focused. Wellness providers, such as spas, clinics, wanted to become more fitness and maybe more mainstream health. Then you had traditional hospital chains and clinics becoming more preventative health. So all these lines were blurring between all these, I suppose, siloed sectors. At the moment in time, we look at them all as one big marketplace, and that is the health ecosystem that allows us to move and become happier and healthier. It was really that kind of blurring of the lines that made us think, okay, people are associating us too much with being the fitness network. And I've got a lot of love for fitness. It's one of the core pillars of our DNA. But the reality is now we cover health and well-being equally so across our network. So Beyond Activ was maybe more of an accurate representation of the network and, of course, of the goals of our network that we represent.
Yeah, 100%. And that that includes hotels, and the fact that now 5-star hotels in particular are becoming a little bit more focused in on their health, well-being, and making their fitness facilities or options a lot better, aren't they? I mean, that's a key ingredient, I think, from your events too, is that you're bringing in hospitality, hotels, because perhaps this may launch us into the trends. We're seeing that these other silos or sectors, as you put it, are starting to embrace all of these dimensions.
Yeah, look, hospitality-centric wellness was a key trend for the last couple of years. It hasn't really died down, if I'm being honest with you. I think hotel groups, resort groups, retreats are ever more prevalent these days in terms of their number and size across the globe. There are now wellness-centric hotels being built by large brands like Marriott, IHG, Accor Group, and I think those have enormous benefit to the populations. A lot of them at the moment are more aimed towards the luxury kind of premium end of the marketplace, but in time you'll start to see hotel chains that are incorporating more recreation, sport, fitness and wellness into the kind of more budget-based brands. But at the moment, for sure, Tarek, you're right, that the hotels and the hospitality groups are seeing this as an additional revenue stream. They're renovating their floor space and the gyms. They're remodeling their spa facilities. They're including these open to the public. And in addition, of course, they're sprinkling along a whole range of wellness trends from sleep management, nutrition, for example, mindfulness, meditation, the whole works. You actually get a real gambit of benefits and services from a hotel group today.
Well said. And what have you seen as some of the enduring trends from, let's say, 2019 and coming into 2024, of course? What would be a few top key enduring trends?
I think group fitness for one has absolutely been on the rise for the last few years. I think maybe, and we'll go into this later on, there's a lot of different levers inside of group fitness. The biggest trend, of course, through the pandemic was high intensity interval training, which is an absolutely booming sector across 2019, 2020. Through the pandemic, naturally, because people weren't allowed to go into these facilities, there was a decrease. But coming out of the pandemic, actually, there has been a gradual decrease of a number of, I think, hit concepts that are doing especially well in the world. And I think they've been replaced by what I would call maybe more light training. So again, Pilates being the kind of number one beneficiary of that trend. So group exercise is definitely one that's been on the rise for the last 5 years. But again, today, group exercise, the winners and losers are very different if you dive into that channel. I think another kind of, key factor has probably been technology. And again, you can split that into numerous different buckets. Of course, SaaS has been a huge component on the business side. And you've seen a revolution and a kind of renaissance of a whole different number of brands that are pushing out a very eclectic and comprehensive solution packages across retention, sales, bookings, payments, client engagement, CRM, and of course, ESP. I think wearables also have been a really buoyant trend in the last 5 years. But again, even that space has changed quite significantly with some of the major players like Fitbit, for example, being replaced by likes of Apple and Whoop, Aura, Garmin, of course, still staying strong throughout there. So definitely technology is definitely one of them. And I suppose boutique fitness has been on the rise for the last definitely 5 years. And that's been a really interesting trend to track globally. But even then, I think some of the boutiques have put a handbrake on in 2024. And it's going to be a more conservative year for them in 2025, certainly. Last but not least, I suppose, is big box, which has had maybe more of a kind of a vice versa trend than, I suppose, boutiques. They were strong up into the pandemic. They really struggled through the pandemic, given high rental costs and the high OPEX and CAPEX they continued to endure through the pandemic. But on the other side of the pandemic, and especially in the last 12 months, many health clubs, many big boxes have found their feet. And again, we'll talk about that for 2025, but they are back on the up.
Very interesting. Yeah, this is very insightful. So focus on those sort of buckets of group fitness, technology, boutique and big box. We saw, for example, FTI still do work with some of the big box chains in Asia, but we had Fitness First shut down in Hong Kong because of, apparently, again, that's the inside information I got was because of the rents in Hong Kong. They were thriving. Their PT penetration rate was the best across Asia, yet they still couldn't sustain those large rents. So they were a bit of a victim at that time in end of 2020. So that was interesting.
I think, Hong Kong's a very interesting country. You had 4 or 5 major players in that industry for the last 4 or 5 years, and the whole market shifted. And I think, Hong Kong is especially known for small spaces and large rents, and the landlords being, I would almost call them quite oppressive, and they're almost near impossible to negotiate with. Fitness First had a great portfolio there, but it was right to close it. They were burning money. And I felt, sorry for everyone involved, especially the guys at Evolution Wellness. They had a great business there, but it simply wasn't sustainable going forward. At the same time, you had Goji or Gogi. Goji Studios closed down. Again, that was 7 or 8 major large-scale clubs. They were a major player player before the pandemic, and they also closed their doors. And then last but not least, of course, this year, 2024 just happened. You had the closure of all physical gyms, physical being the brand. And that was another kind of 30 clubs that went by the way. So who is remaining in Hong Kong? Well, the number one studios there are 24/7. That's actually the name brand. 21/7 from Hong Kong, Macau. They do a great job. They're over 100 sites now, and so they're the market leader. Pure, which has done a great job of maintaining its one of the leadership positions there, has really struggled, especially in Singapore. It's had a few closures, a couple in Hong Kong, but it's found its feet, and hopefully they'll find their way through. And then a couple of big winners, of course, is someone like Anytime Fitness. And Anytime Fitness has done really, really well at expanding into Hong Kong. And alongside that, people like Go24 are still managing to maintain a portfolio of about 10 to 12 clubs. So what was maybe 3 or 4 years ago, Tarek, has absolutely shifted. The major players are certainly very different from what they were. That being said, the market is still very interesting, but it's still small spaces and it's still large rents.
Definitely. No, that's good that you shed some light on that. If we focused in on the group fitness trends, you mentioned that the trend, and I'm quite privy to some of this too, the last few years leading up to maybe last year, 2024, and then sort of diving into 2025. Are you seeing a shift from like high intensity, beating the body down into, you mentioned Pilates, maybe more sort of slower gear 1, gear 2, or more contemplative movement practices? Could you maybe dive into that bucket a little bit?
Yeah, sure. So I think if you look at the number of studios that have opened recently in the past 12 months or 24 months, the vast majority have either been one of two things. They've been a Pilates studio or they've been a strength and conditioning studio, neither of which offer anything to do with high intensity. The actual word HIIT is very rarely used actually in marketing today of fitness classes, because that's how, I suppose, that's how downward the trend has been in the last 12 months. So there has been a huge adoption towards strength and conditioning. For example, look at someone like F45. That was a kind of major player in the HIIT marketplace. It was overtaken, not by numbers, but certainly in terms of its new shiny object feel, by people like FitStop, Body Fit Training, Revel Training, who came up, and those businesses are on an absolute tear. I mean, Body Fit Training is close to 300 being open. FitStop is 150 being open. Revel, I think, is over 30 plus. And there's a number of other studios just like them that are really focusing in on that strength and conditioning, but not necessarily the cardio part, or not too much as it used to be. So strength, absolutely on the rise. And again, numbers of studios opening, especially franchisable studios, is definitely on the rise again. Pilates, I mean, my gosh, it's absolutely the number one trend of 2023. I think it's probably the number one trend of 2024 in terms of growth. If you look at somewhere like Australia, you have KX Pilates, well over 100 studios now across about 6 or 7 countries. Studio Pilates is the other brand, again, another 100 plus studios all over the place. And so Pilates as a whole is just an absolute tear. I think you've also saw the adoption of Pilates inside some of the major health clubs, also some inside some of the major large box clubs, such as Pure, such as Virgin, and it's done really well for them. So I think Pilates on the way up still, strength and conditioning still. I think on the way down, if you would actually, again, look maybe at HIIT as a kind of overall concept, definitely HIIT, high intensity cardio, I think is on its way down. Spin has also had a contraction in the past 12 to 18 months. We saw a huge number of studios being launched up. It is a great modality. There's some great experiences out there, but there is a contraction given to oversupply in the marketplace. I would also say that yoga is also taking a bit of a backward step in the last 12 months, not because it isn't low intensity. I think there's just been such a drive to people to go and try Pilates that they're now going to Pilates more than they are yoga. And so I think on the group exercise class, it's very interesting to see these trends go up. Strength up, Pilates up, yoga coming down, spin coming down. Aquabag boxing, again, more of a niche one. Again, I've never really seen that do too well. Bar has struggled to make any impact in the last 12 to 18 months. So group exercise is absolutely there, but I suppose maybe in different ways. The one closing thought I'd give everyone listening to this, the one group exercise that has gone up in the last couple of years and continues to do so at group level is running. And so you've got an enormous number of run clubs that are happening all over the world now. And these are starting at 6 in the morning, 7 in the morning. They're being run by gyms, they're being run by individuals, they're being run by community centres, but people are running into these running clubs in an increasing number. That's great to see.
Perhaps there's a community-centric element to that as well that could be driving the uptake of the running.
Yeah, maybe well, it's like, I know it lends itself more into sport, but I think in Asia, where the sports are seen very prevalent here now under a social context, in a group exercise, is paddle. And so paddle as a sport is absolutely booming here in Singapore. It's booming in likes of Indonesia. It's booming in Malaysia. It's maybe more towards towards the sport than it is fitness, but technically it's group exercise.
Yeah, and here in Thailand, where I am, it's booming, and I actually play regularly. I enjoy a bit of paddle myself. So that's interesting. So we're talking in the context primarily of Southeast Asia. Would you say that these trends are also prevalent in North America, Australia, and some of these, and Europe even?
I can definitely speak to Asia Pac, including Australasia for sure. Strength and conditioning, Pilates, by far and away the number one modalities inside group exercise in those countries. When you look at someone like America, I can't comment too significantly America, but I can say for certainty that gyms are now buying, for example, more equipment when it comes to platforms, racks, plates, and so that much more of those is getting put into fitness floors and gyms, and Pilates franchisors are doing very, very well inside of the States. So if you're looking across exponential, Club Pilates has done an amazing number. I think there's close to something like 1,200 of Club Pilates across there. You've got other big Pilates brands like Solid Core, who of course are over now 200 sites. You do a great job. They've just secured funding by El Cataton. But you have other big brands like, KX coming in there, Studio Pilates also coming in there. And last but not least, it escapes me, Jet Set Pilates, another one who's done some really good work in the Pilates space. So yeah, these trends are certainly prevalent in Asia and Australasia, but they do ring true all across the globe.
That's so fascinating. And one last thing before we dive into another one of those buckets of trends is I'm quite intrigued as to, from your insights, how Pilates managed to sort of stranglehold and sort of has really overtaken yoga as a trend in that sort of similar modality space, as it were. So are there any insights there from your end as to how it's got this sort of stranglehold and interest quite incredibly?
Yeah, good question. I probably can't answer that too accurately, Tarek. I think maybe what I would say is the moment in time to launch a Pilates studio inside of any country, it's quite a high bar in terms of the execution, the teacher training, the member experience. And so there's definitely, when you reach into a Pilates class, there is that kind of, I suppose, much more of a physical exertion experience than perhaps in yoga. Also, the studios tend to be beautiful. They tend to be quite large, and you normally have great instructors. So I think that's probably number one reason. There are numerous reasons why. I was listening to a ClassPass podcast the other day, and ClassPass was saying that Pilates on their platform is now the number one modality being booked time and time again. We're on ClassPass.
Wow, there you go. Some insights into that. Let's focus in on boutiques then. So by virtue of what you discussed with group fitness, you mentioned that boutiques have taken a steady decline. What do you foresee this year and beyond for boutiques?
Yeah, so as buoyant as I am about boutique fitness and especially about Pilates and strength and conditioning, there was in 2024 a correction in terms of their growth ambition. And so I think every franchisor had ambition to go to 20, 30 sites in every country, to go to 10 countries in the year and massively expand. I think what became very apparent was the money and capex that it took to actually do this expansion. It's a very time-consuming, very costly expansion plan to build a franchise support team, to build licenses, to build legal agreements in all these countries. And so we definitely saw a contraction in terms of the number of franchisors' growth targets in 2024. The question for 2025 for boutiques is who's going to be able to get the funding and who's going to be able to secure the master franchisees to enable them to grow. Now, both of those questions are really, really difficult. If the funding doesn't come from external funders such as venture capital or private equity or a large stakeholder, then you really are just funding it through bootstrap cash. And if your franchise sales are falling and your studios are not performing that well, then of course your margins are quite thin in terms of your commissions for any clubs. So there is going to be a squeeze for a lot of these clubs in how much franchise sales are doing and of course how much commission they're getting from revenue. On the master franchise side, it is quite difficult now for master franchisees to find them. They're a very rare beast, and you're looking to try and find someone that can have a growth plan for 10 or 20 or 30 sites in a country. That's a very risky proposition for anyone to try and do, especially with a small club who have small margins. What you are seeing now, and maybe again we can flip this to the next trend that's positive, is investors now looking for larger scale facilities that are larger scale recurring revenues, such as high value, low price or budget gyms, such as Pure Gym, Planet Fitness, for example. So investors have a choice of looking after a master franchise for a boutique gym where the margins are slim, or a master franchise for a high value, low price club where the margins, if we get it right, are quite fat and quite chunky. And a lot of them would actually choose the latter. So I think from a funding and investment perspective, boutique will be a hard 2025, especially if you're in one of the modalities that happens to trend out or be trending down. And then again, I hate to say it depends on where you are, location, price, rent, and availability of instructors, which is always the kind of the norms, if it will. But for me personally, I think boutiques are going to struggle in 2025. A lot of them are going to run out of runway. A lot of them are not going to be able to scale quick enough to match the competition. And you're going to find that big box, larger health clubs, larger rec clubs, hotel groups are going to continue to invest and eat their market share.
Yeah, very interesting. I know from sort of folk that I'm involved with in the business coaching space in Australia, it's a bit of a struggle keeping up with boutiques that are starting to close down, whether they're one box or two or multiple, for those very reasons, because of the margins. So it does ring accurate from my understandings, and I'm sure listeners could potentially understand maybe from their experiences as well as to why this downward trend. However, it's safe to say you could still, without being incredibly viable, yet still profitable, still run a very, very good boutique and need not be scaled. I would add to that as well, Ross.
Absolutely. Look, I think independent gyms and clubs have got a great part of our business. They're the long tail of the marketplace. Not everyone can scale up to 3, 4, 5, 10, 20 sites, and nor should they. I think there's a lot of clubs in the marketplace in the heartlands and the suburbs that are doing some really great work. Personal training businesses that are doing some really great work that don't demand the 500 members that they need to create a good business and to create a really purposeful and meaningful legacy inside their community. So look, it's tough for everyone to try and make some money in today's marketplace, but it's just tougher, for those that have got real ambition to try and scale. I think if you've got 1 or 2 sites and you are a fantastic operator with great connections and great love for your business, you're going to make it work regardless.
Perfect. Yeah, I wanted to make that distinction as to if your ambitions are to scale versus continue to make an incredible impact to your community. Because I know this firsthand, having started Primal Energy Fitness in St. Peter's with Ray Lowe, who still runs it successfully. And that was one of the first sort of, wouldn't say the first, but one of the first functional, call it gyms, community-driven gyms in the west of Sydney, St. Peter's, back in 2011. Well, we opened up in early 2012. So he's doing a good job there. So I want those listeners to not to be perturbed, but actually just take heart in some of the wisdom here that Ross is sharing. If you're wanting to scale, it's not as easy as one may think because of those very reasons of profitability and the risk-taking from an investor's perspective. Let's now sort of put the arrow to the big box gyms. And you made a very good point here, and I see it clearly now from my education with some of the big box gyms, is the different tierings now. So big box isn't big box. Did you want to talk about sort of those who see now the opportunity to create maybe the words low grade, meaning, they're not expensive equipment. It's run at a very low emphasis on quality. Are you sort of seeing that trend or as an adoption in the big box space versus those such as Fitness First, who've always, prided themselves on education and so forth? Yeah. Your thoughts on that and insights?
Yeah, look, I think there's, let's just break it down into high value, low price, which is kind of the budget end. I mean, that has absolutely boomed and will continue to do so in the coming years. They are well capitalized businesses. They've got huge investment backing. They've got economies of scale, and they've got very, very good business operations and setup operations, whether it's an owned and operated or a franchise system. So they do it very, very well. Crunch Fitness, Planet Fitness, Pure Gym. I mean, these guys are behemoths of companies and they do a great, great job. So I think the high value, low price are definitely on the rise and the way up. But even they, if you dissect into their business model, are being quite smart. They've got the basic level membership. And of course, they've got the premium VIP membership, which of course in Planet Fitness is the black membership. Now, in Planet Fitness, it's $15 a month for the membership for the basic. But the black can go up anywhere between $30 to $40 to $50. And so these high value, low price clubs have done a really good job at getting in this massive amount of people to come in and buy the standard membership. But of course, they've also got a huge percentage of that who are upgrading themselves into these different services. And these different services can, of course, be health and wellness driven. Maybe it can be something along lines of hydro massage beds, red light therapy, cryo chambers. It could even be barber shops, which of course some people use, shoe signing services. So there's a whole range of wellness services being added by these high value low clubs, and they're doing very well as a result. The next band up I was saying is probably what they call themselves is high value affordable price. And what that basically kind of captures, it's maybe not your Planet Fitnesses, but of course it's your Anytime Fitnesses, it's your Snap Fitnesses of this world. Now they do a great job in terms of building a really great valuable experience to their members. Yes, it's not a budget, doesn't have to be budget, but of course it's not at a high premium price. And they do an amazing job of including group exercise. They do an amazing job of including a whole range of wellness services, percussion massage, for example, hot and cold showers, infrared saunas, contrast therapies, ice baths. They're really experimenting with all these different levers. And so this high value, affordable price sector is doing really, really well. I think in the kind of middle market and the kind of premium end of the big box, actually, these are the people that were hit really, really hard and that is maybe your fitness first of this world through the pandemic, they have had to kind of revitalize themselves with a whole range of different classes. A lot of that is maybe Pilates, for example. As you mentioned before, Tarek, they've got an amazingly loyal personal training base. Fitness First Thailand was another great example of an enormous personal training business inside of that brand, and that really kept Fitness First going through Asia through personal training fees. Then you've got people like, for example, Jets, another great brand, I would say kind of on that kind of cusp between middle market, high value, affordable price and premium, and they've got some great momentum into the marketplace there through both Jets International and Jets 24 Fitness in Thailand. So there's really good examples of how these companies are having to find key investors and stakeholders to move forward. Some of them have to dig back into the piggy bank with debt loans from banks to make sure they can move forward, but they have been on the rise in the last 12 months, especially those that have dipped into wellness. A really good example of that is Virgin Activ. Virgin Activ has dove deep into Pilates. It's re-energized their group fitness by including different fitness modalities, not just Les Mills. They've got group exercise strength classes in the middle of the floor. They brought in percussion therapy. They brought in ice baths. They brought in co-working, and they're really going after that co-working social wellness aspect that Virgin Activ really wants to be known for. So they don't want to be a health club. They want to be a wellness club, a social wellness club. And that kind of repositioning of how they're trying to build community engagement, wellness and well-being, well beyond just the gym floor, I think is what a lot of these bigger high-end health clubs and big box clubs are now moving to, and are doing very well as a result.
Yeah, interesting. So what you're seeing is the major trends are these big box chains at these various levels, whether they're low price or high value, low price, or high value, high price. In the APAC region in particular, we're looking at those wellness services, well-being, recovery as a form of adoption that sort of transcends just the fitness element. So is that what you're seeing, that there's a whole multimodality now, emphasis on big box gyms?
Absolutely. Look, I think the big box floor has now changed. The big box experience has now changed across Asia Pacific. If you take that and kind of maybe move the same reference over to the US has gone even one step further. You've got big clubs like Lifetime Fitness and Equinox who are not just investing heavy into new innovations in the fitness floor and new innovations in the wellness marketplace, but now they're moving into health. So they're actually, they've got on-site clinics, on-site physios and allied healthcare. They're now working with you for prescription GLP-1 medication, hormone therapy, and coming up with bespoke programming off the back of that for more individual memberships. That is the huge transcendence of big box clubs and what they're able to do with economies of scale. They can focus now on hyper-personalization, they can diversify their services, and of course they can come up with all these additional revenue services that perhaps a normal traditional boutique can't. So as alluded to earlier on, for me, the market has definitely moved in favor of these bigger clubs that offer bigger services, but as a result, they've really got to nail the services that the consumer want and at a price point that they want to give.
Yeah, one of the great examples in Australia are Total Fusion based in Brisbane. FTI have a good pleasure of having a partnership with them for different education services. But I've gone and visited their sites and also trained inside of them, and could tell you they're incredible, Ross. They encapsulate everything. In one of their new facilities in Newstead, they partnered with the property manager there. So they've gone on this mega partnership where they've sort of interwoven all of the surrounding flats, units, so forth, to actually create this mega community, like through a bridge. So they actually literally connected. And they've got this big tree of life. So it revolves around this big tree of life where they have 4 or 5 different levels around that. And it is, medical doctors, Ross, there's a guy named there who's just excellent. And then there's Sam who's steering most of the other elements. So they have health and beauty, spa, fitness, EP, as you're saying. And they're only 4 or 5, but they're looking to expand slowly. So I think that trend is well and truly started to take off in Australia. Who would you say are the players in Asia, Southeast Asia, that are doing this at a decent level?
Yeah, look, congrats to Leon and the team at Total Fusion. They do an amazing job. You've got a couple of other guys, Saint Haven, run by the Gurner Group, and in Australia, do a great job. That essentially is one of the world's most elitist wellness clubs. You've also got Justin and the team at One Playground, who do a brilliant job at this kind of high-end luxury, holistic health club aspect. When you move towards Asia, good question, is actually few and far between. I suppose one of the places that is most prevalent is in Bali, where you have these huge, enormous holistic wellness clubs, Body Factory being one, Nirvana Strength is another one, The Wrong Gym is another one, Omni is just opening up at the moment in time, and these are fantastic facilities. Another one doing some really good work is probably Babel in Malaysia. You do a really good job of kind of high-end holistic health and well-being, and so all of the ones in Asia are really touching on all these aspects of health and wellness. The trick is, how much do they steer into health? the same way that, for example, Total Fusion and Lifetime are. And a lot of them just haven't quite crossed baseline just yet. That being said, on the other side, you've got this enormous number of well-being clinics that are running DNA diagnostics, blood diagnostics, stool diagnostics, that are now trying to build in, for example, fitness entities. So Raksa is a great example in Thailand. It's doing some great work there. BDMS Clinic has a fantastic gym floor, but it's known, of course, for its wellness and health services. So you've got this myriad where people are coming from health and fitness and moving into health and wellness, coming into fitness. You've got some from fitness and wellness that are coming into health, and it's all the way mixed in between. So honestly, Tarek, it's an amazingly exciting time for our industry in 2025.
So we could say that's still evolving and growing well into 2025 and beyond, particularly in Asia, to make meaning and sense of all of those services in a really coherent fashion with some of those examples we discussed, such as Total Fusion. It's very fascinating topics. Hope everyone's enjoying listening to you just, spitting out all of these different gyms and facilities, and your networking is supreme. So I really admire that about you, Ross, and the integrity behind it too is really shining and so true. Now, let's flip into maybe perhaps one of the last buckets we'll discuss, which is technology, and technology that speaks maybe across personal training, group fitness, boutiques, big boxes. What is trending, and who are the big players, and who are the ones doing really well in this space?
Yeah, look, I think wearables is still, again, we touched on that earlier on. I think wearables used to be Polar and Garmin and MyZone. They still exist and they're still doing a great job. But of course, you've now got the advantage of the innovations of the other type of wearables. So Aura, again, it's just eclipsed a $1 billion company. In fact, I think it's now worth at least $5 billion was Aura. Whoop is another unicorn valued over $1 billion with significant funding and market interest. And so they too have taken over the ring space and of course the wrist space. I've got my Whoop on here just now. That's led to another of I suppose, a series of secondary players. Ultra Human, the Indian ring manufacturer, come out with another ring. Samsung are bringing out a ring. Then of course you have the Samsung Watch and the Apple Watch. So the wearables now are fantastic. The one kind of missing, I suppose, feature that everyone's chasing for, the holy grail, is trying to find out a glucose monitoring that's non-invasive. Now that's something that Aura is trying to work on at the moment in time. And if you could have, a ring that diagnostically is great sleep management, great for exercise, and tell you when you spike up and down on your glycemic index, that is a real game changer. And all of these wearable companies are chasing after that. So it's an interesting time for wearables. I think there's a lot of interesting players coming through. The question for me is, what is the next step change? They look great. They're great design. Yes, they've added in kind of AI-driven health coaching in the back of it. I can go into my Whoop app on my phone. It'll tell me a little bit more about how to condition my day, how to program my day. I don't necessarily use that a lot, but if it was a function to say, for example, I've just eaten a bowl of pasta, how's my glucose monitoring doing? That's a very interesting feature for me. So that's wearables. I think, again, we've touched on this as a SaaS marketplace. The SaaS marketplace was maybe only run by the kind of very legacy companies out there in the marketplace, the Twin Oaks of this world. MindBody was out there for a long time as a kind of default category for gyms to get involved in. But if you looked at the number of SaaS providers in there in the fitness technology space, as an operator, you're spoiled for choice, which is the benefit. But it's very difficult to try and understand which of these major players might be for you, depending upon your size, your growth ambition, whether that's to franchise, to license, to go overseas, to build new services, to build PT, whether you want the complete gym management software solution with digital entry, whether you want to build a bespoke app on the back of that. There's a whole number of questions that an operator must answer now. In addition to that, now you have retention software that's coming in that can alert you to the fact that your member might be wanting to leave the gym. They're a risk and you have to try and pursue them either face-to-face or through a number of marketing mediums. That's also being brought in now with AI chatbots and also now with AI software that's kind of linking all this together for financial accounts. So the technology role for an operator is amazing. When I had my gym back in 2016, Tarek, I went for GlowFox. And GlowFox for me was perfect for what I had for the gym. They're a great company. But even GlowFox now has evolved into this enormous company that has a whole different range of features and benefits, none of which were available at the time I actually took that contract open. So for me, the SaaS products are just unbelievable. Virtual reality hasn't quite got there yet, if I'm honest with you. The metaverse hasn't quite taken off yet. Augmented reality also hasn't quite taken off yet in the technology space inside of our fitness and wellness. But AI is what everyone's talking to. And again, it's finding that platform that can deliver some real benefit for you.
Yeah, and I think just making sense of AI too, that's what we need to focus on before AR. And I think you're right, the features and benefits analysis, it just can't be said truer than what you just elaborated. I mean, I made with a secondary mind mistake of rushing into the software that really wasn't beneficial. I won't name it just because I don't want to put them on the spot. But, you're right. You need to, guys, if you're sort of deciding whether it's one gym, two gyms, you really need to do your diligence, ask those questions. How is it going to benefit you? And just have a look and maybe speak to 2 or 3 or 4 and try to get the best deal, but what works best for your facility. So I think you're so true. I've adopted certain modes of AI into what I do for FTI. And once you build that ecosystem and it's like customized for you, it's tremendous. The amount of efficiencies, workflow, emphasis, it's amazing. So I'd say for those who are sitting on the fence, just adopt it wisely, AI. And again, there's really nothing. It's hard to say you should try Glowfox or you should try something else because it really needs to be fitted for that particular person or their business, doesn't it, Ross?
Yeah, there are honestly great companies out there. I mean, I could sit down and probably list 20 good CRM companies out there, SaaS companies that do a great job. And you have local leaders. There's local leaders in Saudi Arabia, there's local leaders in Singapore, there's new indigenous companies coming through. If you look at the funding marketplace for 2024, there was various kind of new startups in the SaaS world that got significant funding for what they were doing, actually. People want a little bit more information. We've kind of got a few of these deals and tombstones listed on our website. If you go into our report website we did at the end of the year, you can click back and look at all the kind of mini headlines that we talked about through the report, and some of the kind of the deal flow is in there. But yeah, SaaS companies got some seriously good funding in 2024. So they've got money, they've got capital, they've got ambition. And it's going to be very interesting to see how that tech play all runs out in 2025.
It's a fascinating space in general, the AI and so forth. Now, if the listeners want to sort of know more about or read more about the 2024 trends, are we able to send them a link to those trends? That'd be terrific. And also some information on Ross and how to just find out about them. Beyond Activ is the simple way to search. You can check out their 4 various events. I'll be there in at least 2 of them, in Saudi Arabia next month, and then in Singapore in June, and potentially in Sydney in November. Now, one final question that we usually ask our guests, this is, if there's one thing that you would like to see changed in the health, fitness, wellness industry, what would that be?
Yeah, great question. This probably hasn't changed my answer in the last couple of years. It's the ability for our industry to focus on different demographics. I think we do a great job of focusing on those that are under the age of 40. I don't think we do a great job of focusing on those over the age of 40. So when we sit here and complain about penetration rates, but we're not creating any products or platforms or facilities for the 40s, the 50s, the 60s, or the 70-year-olds to feel welcome, it's no surprise that they're not a big part of our community. So that'd be my magic.
Couldn't agree anymore, Ross. Ross, well, it's been fascinating to have you on this podcast. Really appreciate your time, your wisdom, and your genuineness. So thank you.
Thanks very much, Tarek. And maybe one last comment, as I just obviously saw the news recently about the passing of Steve Cotter from the kettlebells, which I know, of course, you worked with for many years, Tarek, as part of your functional training. So my thoughts go out with him and to yourself and everyone who knew Steve. I didn't know him personally, but I respect him for the man he was and what he did, and I tip my hat.
Appreciate that, man. Yeah, it's really hit hard, and I know he's in a great place. He was such a good human being, incredible physical feats, but he always treated everyone he came across equally. And his enduring qualities, his legacy, his son now, 22, will be no doubt a phenomena in the BJJ space. He's so gifted and talented. And yeah, there's a lot of well wishes out there for Steve, and his legacy will truly live on. So appreciate that, Ross.
Pleasure. Thank you very much for the invitation, Tarek, and double listening. I wish you a very successful 2025.
If you enjoyed this episode, could you do me a quick favor? If you're listening on Spotify or Apple Podcasts, could you please add your 5-star rating? Doing this really does support the show and gets our episodes in front of listeners just like yourself. Thanks for your support. I greatly appreciate it.